Welcome to Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the S&P 500. I'm also going to have a look at the ASX 200 and a very interesting type of opportunity which I'm seeing a lot more of lately. So make sure you stick around for that. As always, this general commentary doesn't take your personal situation into account. And also just one video this week. My travel schedule for a presentation for a seminar I'm doing tomorrow doesn't mean I've got time for the second video and for all the uploading and behind the scenes work which goes into putting these on. So just the one. Normal schedule next week. So okay, let's jump over to our first chart. So let's start with that S&P 500. And it's been a positive week. Been a positive week. We've seen more confirmation that this upward momentum, this upward trend remains in place. I thought we may have gotten more consolidation around when we had this pullback in late June, moving into early July. I thought maybe we're going to see the market pull back towards these moving averages. That would have been a nice pause, and I think would have set a nice platform for another rally. But it really doesn't matter what I think would look nice. It's what the market does. And we've had a short 3-week pause, and we've had continued strength. And I think that the key thing to take out of this price action that we're seeing is that the market keeps getting bought whenever there's a dip. And buying on pullbacks is the underpinnings of a healthy bull market. And it really does exemplify why I think it's best not being too clever when you're participating in these upward moves. Like a lot of people, they'll say, look, I'm going to take some profit. I'll buy in when it pulls back to the moving averages, and then I'll let it run again, and I'll sell and I'll buy back. It all looks good in hindsight, but it can be very hard to do in practice because like what I was thinking a couple of weeks ago, I thought we may have pulled back a little bit more to those moving averages, but it didn't happen. You can end up exiting good positions and then watching from the sidelines as they continue to run. So I think the play is to remain long. That's what I'm doing with this market. And that's what I've been doing for, as you know, for many months. It's been staying with this overall momentum. I want to be on the side of the momentum. But right here where we are now, up testing around, getting close to 4,600. I've been saying this for a couple of weeks. I don't think this is an asymmetric entry point. Now, just be clear, that's not saying I think the market's about to top out. I'm saying I don't think it's asymmetric in terms of the risk reward. Like how much further could this rally? There's significant resistance coming in at the top, the market top, and that's only a couple of 100 points away. So to be buying now, how much upside are we looking for as opposed to how much risk do we need to take on board to add to a position? I also note that we're still stretched above these moving averages. At some point, there's going to be some mean reversion event, which does bring the market lower. So that's why I'm hesitant to add to positions after a big run. I think the time to have added to positions, and I said this at the time, was back on that breakout back in late May when the market started to come out of this big trading range, which is a dominant feature on this chart. And that said, though, I'm in no hurry to be taking profits up at current levels. I think it's a case of let the trend run. That's what's been working. That's what's been working for many months now. It's been staying with this broad upward momentum, wearing some pain on these pullbacks and some uncertainty, but staying with the momentum until there's a clear-cut reason to sell. We just don't have that. There's not a clear-cut reason to be exiting at current levels, at least in my opinion. Now let's have a look at the equal weight, S&P 500 equal weight. Really interesting here is that unlike the S&P 500, this has been stuck in a range for the last 12 or so months. But what we're seeing now is the equal weight is now testing the upper end of this range, and I think that this is, look, what I really want to see here, I want to see the equal weight break above this February high. That would bring it into line with the S&P 500 and the NASDAQ, which broke above their February highs a couple of months ago. This lagging in the equal weight it's been part of the story, the lack of breadth in the market, in that a a handful, maybe 7 or 8 of the really big cap stocks have been doing a lot of the heavy lifting. What we're seeing now is the broader market is starting to catch up, and this is encouraging. The moving averages are positive. The market's above the moving averages. I'd like to see this. I'd like to see this February high break, and that would just give more confirmation that the trend continues to be upwards, that the conditions continue to improve, and so that's the thing to be keeping a close eye on over the next week. Do we get some sort of pause here below the previous high, some sort of consolidation and then a break, or what happens? Let's just watch this closely. But it's starting to fall into line with the S&P 500. Now, if you're getting some value, from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. It just tells YouTube people are watching. And YouTube does what it does, and it shows other people, and that helps me heaps. So please do that. Hit that subscribe button also. Now, quick look at the Russell 2000, the small caps. Most of the focus has been on the big cap stocks over the last 6 months. When you look through the media and general commentary, a lot of the focus is on the big cap stocks. But don't lose sight of these small caps that we're getting in the Russell 2000. And they've really been left behind, and it's been getting back to this lack of breadth story in the market. The small caps haven't been participating; they've really been stuck within this trading range. But I think this technical situation continues to improve. It's looking more and more like this is a basing structure. We've now got the Russell testing the upper end of the range. Again, keep an eye on this February high. Let's see whether the small caps can break their February high. Perhaps we get some consolidation in the near term. We are also getting stretched above the moving averages on the Russell. So I keep coming back to this point about stretched above moving averages. Certainly not an asymmetric time to be adding, like right beneath resistance when the market's stretched. But the underlying tone of this market continues to be positive. The dips are being bought, and the rallies are looking impulsive. So we're only about 2% below the February high based on Thursday's close, and I think a break above that February high really does open the possibility for some significant catch up in the at the smaller to mid cap end of the market. We don't have the breakout yet. I want to wait for the breakout. I don't want to preempt it, but I've got to say it is looking encouraging. Now, let's quickly jump over to the ASX 200. And as I've been talking about for several weeks now, it's really been a case of this market lagging, of it being range bound, of it being really stuck and being quite directionless. And I think it's really been a case of waiting for the market to show its hand. Where is the market going to go? Where's the path of least resistance going to be? And I think we got a glimpse of the market's hand about a week and a half ago. And I mentioned this in last week's video where we got this break below support at around 7,040. Market tried to go lower the next day before quickly snapping back. And now what we've seen over the last week is this rally's continued back up to the upper end of the range where the market's stalled and just started to pull back over the last couple of days. But it's been a really strong rally. It's been that typical, that classic V-shaped recovery. We're now above the moving averages, which is positive. And I think the fact that we've got this, what now appears to be a false break, the fact that we didn't see that follow through momentum, it really does suggest that this market's being bought on dip, and that's encouraging. It's highly encouraging. And this is actually one of my favourite setups where you see a market that can't continue to fall after breaking support and quickly snaps back. It's I think when a market can't sell off following a break, I think it's a sign that the path of least resistance is potentially starting to shift to the upside. I'll show you something which is quite similar. It's the let me just jump back and just go over to the Dow Jones where it's similar price action. So let me just show you what I'm referring to. So this is back at the ASX 200. ASX 200. So we had a strong rally, and we've had a period of sideways indecisiveness where the market hasn't really had. We haven't known where the trend was going to be. Go over and look at the Dow. And this is on a different time scale, but it's the same principle. We've got the strong rally, we've got the period of sideways price action, which also involved a break below support, which didn't have follow-through momentum, as we were just speaking about. And what's ultimately happened is this market's broken to the top side. So I think something similar could happen in the ASX 200. So back at the ASX 200 now, it could be a case that this market continues sideways for a bit more before having a test at breaking higher. So not a prediction, it's just a possibility. It's a possible pathway based on many other situations that I've seen in the past where markets can't follow through on the downside, they rally, and it's setting the stage for a path of least resistance change to the upside. So let's continue to watch this space, and then it's like a test of this triple top resistance at the all-time highs around 7,600. Also interesting that I'm seeing lots of interesting buy signals coming through the scans I'm doing each day through my Motion Trader service. So it's going to be, I think maybe these markets are going to continue to defy the bears, and we're going to see some more upside. I'll just quickly show you one of the examples of the type of signal I'm seeing. This is in the US market as well as in the Australian market. So this stock's in the Australian market, a company called Credit Corp, CCP is the ticker code. So this isn't a stock I'm looking to buy at the moment. It's a stock which turned up in the buy signals for Motion Trader about a couple of weeks ago, and it's the sort of signal I really like to look for. So just quickly looking through this chart, look at the moving averages, the 50 and the 100 day. So from the 2022 high, once this stock got below the moving averages, it was just leave it alone, stand aside. There's nothing to see here. It's not a stock I'd want to buy. It's falling. The trend is down. It's below the moving averages. But what we've seen in the last couple of months, last few months, markets bottomed, started to turn higher. We had a strong rally back above the moving averages. So once the market's above the moving average, it starts to get interesting. The moving averages crossed during July. Then the market went into a tight compression range. Compression ranges are really interesting because you get the pent-up energy during this range, and once the range breaks, you can get some really good upside momentum. And this sideways period just gave those moving averages a chance to catch up. So if you're ever going to buy a dip, I think the time to buy a dip is when markets pull back towards those moving averages. That's where you get that asymmetric entry point and the potential base for an upward launch. And in the last couple of weeks, we've got that breakout, we've got the strong run. I'm seeing this across some of the US stocks I'm following. I'm seeing it across other ASX listed stocks. This is the type of opportunity I want to look for. It is now stretched above the moving averages. So again, I repeat, it's not the sort of stock I'd want to buy now. I would have wanted to get in a couple of weeks ago when the buy signal first occurred. And I think if you look for this sort of asymmetric opportunity, what I think you're doing is an asymmetric, I mean, where you're looking for opportunities where the upside potential is at least 3 times greater than your downside risk. I think you're really starting to stack the deck in your favor, and that's how you can potentially do really well in trading stocks over the medium to longer term. Doesn't mean everyone's going to be a winner. They don't all do this. Some of them break up and they fail, but it's the ones that run. That's where you make your money. Your risk management gets you out of the ones that don't kick on. So look, let's leave it there for this week. Thank you for joining me. Great to be with you again, and look forward to coming back. Talk to you next week. Until then, bye for now.